Our next panel, and I'll introduce our moderator, Sally Martin, who's going to be looking at innovative responses to the housing recovery. So often we look at data and we say, oh my gosh, what are we going to do? How are we going to respond to this? And I think Sally's panel is taking a look at how we can respond to credit needs. What are the innovative ways that we can do this? How can we reach in and get going on this rather than just saying, oh my gosh, it isn't working. We failed once again. So Sally, take it over. It's all to you.
Thank you, Chip, and good morning, everyone. Upwards of $900 million is flowing into the greater Cleveland area through federal rescue funds in response to the COVID-19 pandemic. These funds are providing a once-in-a-generation opportunity to address some of the housing challenges that have been plaguing the region for decades. The Build Back Better bill is making its way through federal legislation process, and if it gets passed, it will provide an additional large infusion of capital that has the potential to transform neighborhoods that have traditionally been disinvested. We have a rare opportunity to utilize these funds to create systemic and lasting change in neighborhoods that have largely been underserved. This panel provides a high-level view of the opportunities that are available at the national and state level and highlights innovative partnerships that are producing positive outcomes in our region, including the CHN Housing Capital's Believe mortgage product, a sorely needed small dollar mortgage product, which until recently has been largely missing in our market. CHN Housing Capital, which is the lending arm of CHN Housing Partners, was created to address the lack of traditional home financing available to homebuyers of color, homebuyers with imperfect credit, and low to moderate income homebuyers in Cuyahoga County. So far, over 27 mortgages have been originated since the launch of the program in April of 2021, with 30 more applications pending. And today, I'm proud to introduce our highly distinguished panelists. We have Bill Faith, who has served as Cohio's executive director since 1994. Throughout his career, Bill has worked to develop housing solutions for people with disabilities, directed agencies serving the needs of the homeless, and promoted affordable housing, especially for the very low-income people. He has extensive involvement with all key state and federal government agencies on a wide range of housing and homelessness assistance programs. On the national level, Bill has served as chairman of the National Low Income Housing Coalition and also is president of the board of directors of the National Coalition for the Homeless. Kevin Nowak is executive director of CHN Housing Partners, responsible for the overall management of CHN, its 35 real estate partnerships, and combined annual operating capital budget of $55 to $75 million. Under his leadership, CHN has become a member of the NeighborWorks of America network, launched an emerging community development financial institution, which we've all been waiting for quite some time, to address racial equity in mortgage deserts, and was chosen to administer both the first of its kind Lead Safe Cleveland Fund and the Cleveland Cuyahoga $18 million CARES Act rental assistance program, which we should point out is the most successful one in the state of Ohio. In his prior role at CHN, Kevin led the development of the organization's leading edge initiatives, including its growing role as strategic partner to other nonprofits in new markets, including Detroit, Pittsburgh, Western New York. Prior to CHN, Kevin was the National Equity Investment Manager of Key Community Development Corporation, and early in his career, he practiced law at Thompson Hine. He holds a bachelor's in law degree from the University of Michigan. And we have DJ Valentine with us today, who is the Vice President and State CRA Mortgage Sales Manager at Huntington Bank, who you just heard from Frank has done a really wonderful job of serving the credit needs in our community. DJ Valentine has worked for Huntington as the State CRA Home Lending Sales Manager since 2012. He's been with Huntington for more than 20 years, working in a variety of areas, starting first as a personal banker before becoming a banking officer and a district manager. As State CRA Home Lending Sales Manager, he works with communities, including low and moderate income neighborhoods, to meet the needs of borrowers in all segments. Valentine is a member of the Central Ohio Community Land Trust Steering Committee and the Huntington Bank African American Business Resource Group Steering Committee. He's previously served as a board member for Leadership Westerville and Leadership Worthington, and was a member of the board of the Westerville Chamber of Commerce from 2002 to 2008. He's currently on the board of the Greater Ohio Policy Center, and he's a graduate of Marietta College in Marietta, Ohio, and resides in Columbus. So I would like to first introduce Bill Faith, who will take us through some of the high-level views of what is out there and what we might expect to see in the coming year.
Well, thanks, Sally. And I think Catherine's going to help me with some slides because I have a bunch of numbers to relay. I thought it'd be easier to see them on a slide. But I will, first of all, I really appreciate all of Frank's work. It's always great to hear about his research and hear about his insights as to what's going on the lending front. I think, and also it's great to share the panel with CHN, Kevin, and DJ at Huntington. You know, Huntington has been involved in several positive initiatives on the housing development and the community development front in the Columbus market. So it's great to see that some partnerships are growing in the Cleveland market as well. So I look forward to hearing more about that. I want to start by talking about kind of the big picture housing needs. And I don't know if Catherine's got the slides ready to go, but I think the initial picture I want to talk about is really kind of where our needs are in the state. So we have an awful lot of households that are behind in rent. This is not you know, exactly news. We've been struggling with this throughout the pandemic. Based on the October data, you know, the numbers continue to increase. We see 362,000 Ohio households are behind in their rent. Many more have little confidence that they're going to be able to pay next month's rent, 236,000. We've been watching the eviction numbers at the court, and Supreme Court gathers all the eviction numbers around the state. And, you know, during the pandemic, the eviction levels dropped way off. So that was good to see. Part of that was because we had, you know, the eviction moratorium, although I actually think part of the reason the numbers dropped way down is the various housing courts or other courts that deal with evictions were overwhelmed. We're trying to worried about social distancing, so they cut back on the volume of evictions they were processing. But we're back up to 7,000 evictions a month, which has grown since the beginning of the pandemic. But it's not back to pre-pandemic levels, so that was good to see. That we're still lower than the pre-pandemic levels. The other piece I want to mention is, you know, rents are rising in markets throughout the country. It's true here in Ohio in many markets, even in Cleveland. We're seeing rents go up. So I don't know if are you guys seeing the slides? I don't really see the slides on my screen. No?
We
Yeah.
see the cover page. I think they need to be advanced.
Yeah. Oh, there we go. Okay, and then we put the little slide in there about only 1 in 4 households that are eligible for rental assistance. This is, you know, the normal federal rental assistance through housing voucher program and the like. So we have that backdrop of many people that are eligible for housing assistance simply don't receive it. The next slide talks about emergency rental assistance, something that Kevin is extremely familiar with. And it's true, when we look at all the emergency rental assistance programs that have been stood up since the pandemic, we had the initial allocation of funds to Ohio, and this was from the Consolidated Appropriations Act that passed last December, so December of 20. Ohio received $775 million, and that was largely at the state level. but also 18 local jurisdictions received an allocation. And that has been a big boost to all of the rental assistance, emergency rental assistance efforts, really everywhere. CHN really stepped up to develop a good approach to this, and also really worked hard to get the money out. They have done an excellent job, particularly compared to other programs around the state of Ohio. So so that 775 million is in the process of being distributed. We refer to that as ERA 1. There's another batch of money, $447 million, that is came from ARPA. So that's the big bill that passed last spring, and most of that money hasn't been touched yet because we're experiencing slow spending rates of this money. So if you look at the slide, there's, the Treasury Department is going to start looking at reallocations for jurisdictions that have spent under the 30% threshold. You can see the state expenditure rate is 14%. So that's way too low. But you can see in Cuyahoga County and in Cleveland, the rates are much better. The money's getting out largely due to Kevin and his colleagues at CHN, who have really stepped up a good program to help get that money out throughout Cuyahoga County. So the programs had to submit improvement plans. So like the state of Ohio is submitting a improvement plan to their approach to the Treasury Department. And I think they've been scurrying around trying to come up with ways to improve. We've been advocating with them pretty much the whole time. We're trying to push for a more streamlined application process. They distribute their money to largely to 47 different community action agencies throughout the state. Obviously, some of those serve more than one county, and they're really relying on the community action network to get the money out. Some of those groups are working hard, trying to do a good job, no question about it. But some of them aren't used to running programs like this, particularly, and pretty much all of them aren't used to running programs that are this large. So the money has gotten, there's been bottlenecks all over, backlogs of applications that have been filed and are still in the process of being approved. So we have bottlenecks around the state where applications are slowed down. You can see on the slide, we compared Ohio's spending rate to our neighbors, and you can see, Pennsylvania is ahead of us. Well, really everybody except West Virginia is ahead of us. So, other similarly situated states have found much better ways to get the money distributed, and I'm really afraid we're going to see money get reallocated to other states because we haven't beefed up our capacity to get these dollars out. So this has been a big focus of Ohio. There's been research that's pointed out that most tenants are not familiar with this program. They don't know that it's available, never mind know how to apply for it. The outreach hasn't been very, very good. I know Cleveland's done better than average for sure, but the tenants don't know, and also the landlords don't know. And we had a meeting this week with a number of the landlord groups, and their frustration level is pretty high. They're starting to direct that frustration toward the state. So I hope to see improvements in this program soon. The next slide talks about a different program that we got from the American Rescue Plan Act from the spring. This is a smaller program. It's running through the home framework. So the regular HUD program called Home. They're using that framework, but the focus of this program is really kind of different. You could see nationally, there was $5 billion made available. There's money, $90 million is under the control of the state, and that probably is going to be largely handled by OFA and somewhat by the Ohio Department of Development. Cleveland also received $17.7 million here, and Cuyahoga County got 9.9. So that money is available for the purposes described on the slide. The one that we are really focused on is the production and preservation of affordable housing. So that one, it's tricky because the population focus is on people that are homeless or seriously at risk of homelessness, people with behavioral health complications, and other groups with special needs. So that we're advocating around this to get the money steered toward, housing production. Everywhere we turn, everybody says there's just not enough affordable housing for their folks to get into. So initially, the Department of Development has allocated $30 million to the Housing Finance Agency to distribute, and that's in the process of being distributed. They are starting a public input process that HUD requires to decide what to do with the other $60 million. So the needs are great out there. We hope this money can get deployed to expand the availability of affordable housing. The next slide is an interesting, another pot of money. The state and local fiscal recovery funds, this is really flexible funds that the state government and the local governments have available to them. So the state government received $5.6 billion in this pot. This is money that's already underway. And then Cleveland got 512, Cuyahoga County got 240 million. And so there's a lot of advocacy going on around how to use these funds. There's, it's not, money that we could really use for operating costs because it's one-time money, but it can be used for things like housing development and other needs that we have in the state. They've allocated a bunch of this money already at the state level. They have $850 million left in the pot that they had set up for 2021, but they have another $2.7 billion that's available for next year. So we worked with a bunch of different organizations throughout the state, developed a proposal to pitch the governor and the legislature to use a lot of this money for housing development, home repair, accessibility modifications, helping to keep seniors and others in their homes that need home repair and other modifications. And we advocated for some dollars to go to homeless youth projects. The Fuse initiative, which is involving the criminal justice system, which would help people exiting prison find a place to live. The other piece is the Healthy Beginnings at Home, which is the project to provide housing assistance to avoid infant mortality problems. So these were things that we put on the table. We actually have a meeting coming up next week with some of the senior folks in the governor's office to try to build more support for this. But 183 different organizations and companies signed on to this proposal. So we're trying to push it through, and hopefully we'll get them to act on this, if not yet this year, early next year. And then Sally mentioned the Build Back Better plan on the next slide. So you all have watched the debate unfold in Congress around this, which has been a mess, to say the least. But they did get the infrastructure bill passed. We have holdouts in the Senate and some in the House. We hope this bill will move. It looks like it's incrementally nudging toward passage, although it's very possible this won't make it to the finish line. They got a lot to do before they leave for the holidays. So I think, we got to make sure this bill gets done. They did put a lot of money in this bill for housing issues, and we highlighted some of the big ones on the front here around creating more vouchers. This is the biggest growth in the voucher program I think I've ever seen in my career. I mean, this is $25 billion. The earlier proposal had it much higher, but as the push and pull in the legislative process happened, the number has gone down. They're talking about modernizing and repairing public housing. They have that number at $65 billion right now. That's a big deal for Schumer because a lot of that goes to New York for all of their public housing, and putting more money in the National Housing Trust Fund, which can be used for housing development. So this is really a push with our congressional Democrats, because the Republicans aren't going to vote for this bill in either chamber, more than likely. So I got to thank Sherrod Brown, because he, in his role as the chairman of the Banking and Housing Committee, he's really been fighting hard for these housing dollars. Has really done a great job. We've also gotten support in the House from Congressman Ryan and Beatty, Chapter. I mean, a number of people have stepped up to help nudge this forward. So the next slide talks about some other housing provisions that are also in this bill. I'm not going to go through all of these. You can see on the slide that there's some of the programs we know well, like HOME and CDBG, and also some new programs like the Housing Investment Fund, which would grant money to CDFIs and others, more money for lead paint removal, and et cetera. Just in the last couple weeks, they added some provisions to improve the low-income housing tax credit program, which was good to see. That was not originally in the bill. So hopefully those improvements will stay in place. So you can see that this is a huge increase in housing resources if we could get this this bill done really within the next several weeks. So we've done about everything we could think to do, and the congressional Democrats from Ohio have been very supportive, and we don't have very many of them left in Ohio, but the ones we do have been helpful. So I would encourage you, if you talk to any of these congressional offices, to encourage them to prioritize housing in the Build Back Better bill, because we've got to make sure we make it to the finish line. So those are some of the big things that Sally talked about. But these are big opportunities to do more about housing initiatives. There's a lot more that I didn't really have time to cover, but there are great opportunities here for us to take advantage of, that kind of a once-in-a-lifetime opportunity to see some of this, to address the longstanding problems we've had. I did want to mention just a couple things on the next slide that are happening at the state level. So this gets into the weeds a little bit, but there's several bills that have been put on the table or will soon be put on the table. One is a bill that is really about getting the county recorder's offices digitized. So I'm sure your office is already digitized, as it is in many urban areas of the state, so that people can access the county recorder's records when they're conducting, business involving real estate or other such things that lawyers or other folks need to access. They could do that online, but that's not true everywhere. There's a lot of counties that have paper in the back room. They don't have these records digitized. So this bill would push to digitize these records going back 40 years. They would increase fees for recording documents in order to pay for this. And because we get 50% of the county recording fees for the Housing Trust Fund, we're hoping that will give us a boost to the trust fund as that bill makes its way through. It's currently pending in the House. It's in the Finance Committee, and the chairman and many others have pledged their support to get the Housing Trust Fund taken care of with that bill. So the other thing I wanted to mention, which is kind of crazy, but I think we need to be aware of it. There's a group that's pushing for changing the landlord-tenant terminology in the Ohio Revised Code. And I've talked to them. There's really no good reason for this. I mean, no positive reason for this. They talk about it. Some of these terms date back to medieval times, and it's time we updated them. And it's like, well, maybe, but tenants have rights. They want to change the term tenant to resident. Well, resident means a lot of different things in a lot of different situations, and residents don't have rights per se. So that's worrisome. They want to change landlord to housing provider. And again, that's not a recognized term in the law. So they are moving forward with this bill. They have it ready for introduction. So we're opposing this bill. We're going to try to push to make sure it doesn't get enacted. We did a little search in the Ohio Revised Code. There's hundreds of times that the word resident already appears, and it means different things in almost every time it shows up. So this is not a bill that we will be able to support. There is another bill that's positive, which is a bill that would provide a process for eviction record expungement. It could be very difficult for tenants to find a new place to go, once they've been evicted. So we want to make sure they have an opportunity to get those records expunged. So that bill, Senate Bill 158, actually has bipartisan support. So there's at least some chance that it could make it through. So with that, I'll wrap it up. I look forward to hearing from DJ and Kevin about the interesting projects they're working on in Cleveland with the Huntington.
Thank you, Bill. Bill is going to have to leave us around 11 to meet with a legislator. If anyone has any specific questions for Bill, if you want to post them right now in the chat, that would be great. And Kevin Nowak did mention in the chat that the other item that he wanted to talk about today, or was hoping Bill would touch on, is the Neighborhood Homes Investment Tax Credit, which should be a game changer for acquisition rehab. Bill, did you have any thoughts on that Neighborhood Homes Investment Tax Credit?
I think that'll be that's a very promising thing. I think, Kevin, maybe you should. I didn't get into the weeds on that one, so maybe you could provide some more detail when you talk about it. But yeah, it looks very promising.
Okay, thank you so much. And I had one quick question for you. With the money coming down through the state, which is $850 million remaining for 2021 and $2.7 billion coming in 2022, what is the process by which that ends up getting dispersed into regions and neighborhoods?
Well, the state, I mean, maybe there's people on the call that know what process is being used in Cuyahoga County and Cleveland. At the state level, it's kind of a free-for-all. I mean, to be honest, it's a matter of getting the attention of the governor and people in the administration. And then you'd also have to get agreement, at least through the finance committees in both the House and the Senate. So different ideas are percolating up through one or more of those channels. And that's what we're trying to do, is to get the proposal we put together noticed by these people. So we've met with, the finance chairman in both chambers. We met with a number of members. We've talked to multiple people within the administration, and eventually they'll have to agree. They'll put a proposal on the table, and then they have to get the votes either through controlling board or actually through the legislature on a vote on how to spend the money. So we have to get it, an allocation and appropriation authority to spend the money. So that's why you got to involve the legislature. So it's kind of complicated. There is not a very specific, set process. So it's just a matter of advocating with the administration and the members of the legislature.
Thank you. We have a question from Phil Starr. How have the banks invested in housing in Columbus through the Franklin County Housing Trust Fund, a $100 million loan fund?
Well, there's a couple different things. And it's not because DJ's on the panel, but the Huntington Bank actually provided leadership among from the private sector to develop a loan fund which could be used to help on housing development projects. And that money, they hit $100 million of money that was put aside by the private sector for that purpose. They've developed sort of terms and requirements of that fund. It's a loan program, so the money has to be paid back by the development team with some interest, but much lower interest than you normally see from the bank. So that one is promising. It's really oriented toward what they call workforce housing largely. So that means it's serving a little higher income, not high income, but more like moderate income rental housing, which is still, there's a great need for that in Columbus as well. I think the other part, and Chip has always been jealous of this because Columbus managed, because of really Mayor Coleman when he was elected mayor way back when, and actually Mary Jo Kilroy when she was a member of the Franklin County Commission. They worked on their own proposals to dedicate revenue to create a housing trust fund specifically for Columbus and Franklin County, and that it's a increase in the real estate transfer fee at the county level, which helped to pay for it, and at the city level they put a surcharge on the hotel motel tax. So a portion of that goes into the fund. About half the money goes to support homeless programs in the county, and the other half the money goes to support housing development activities. So that's been going on for many years. I serve on the Columbus Franklin County Affordable Housing Trust, which distributes the housing portion of those funds, and it's worked really well. But this fund that Phil mentioned, is the $100 million, is the first time we've seen the private sector collaborate together on putting a significant level of resources available for housing development projects.
Thank you. We have another question speculating if you knew whether the landlord tenant terminology bill is from ALEC.
I wouldn't be surprised, but I don't know that that's true. I mean, I wouldn't be surprised if ALEC took it up. We've looked around other states and talked to folks like us that have coalitions in states around the country. Other people have not seen this emerge yet, but that could happen. I mean, we see a lot of things come from ALEC that is problematic. So this may well be adopted by them.
All right. Well, thank you very much, Bill, and good luck with your conversations later today. We hope you get good traction on what you're proposing.
Yeah, it was one of these meetings I couldn't move. I had to go with what they were available. So apologize for ducking out early.
Very well understood. I'd like to bring Kevin Nowak on now. And Kevin, your agency is definitely at the front lines of dispersing the funds that have come down to Cuyahoga County. If you could take us through how that's going, especially with Neo Rent Help, which is your conduit for the rescue funds for rental assistance. you said in the chat that so far you've deployed $47 million in rental assistance and assisted 12,000 households to date, which we are aware is the strongest performance of any agency in the state. Maybe you can take us through how that's working, how you did it, and then we'll get into your partnership with Huntington.
Sure. I appreciate it, Sally. Hi, everyone. Good to see you. I think this is the first of these I'm doing in my office at the office. So I had to think about how I was going to place my video and not look terrible and maybe have little charms in the background. Still working on it. It's not quite as decorative as what a lot of you have seen in my home office at home, but we'll get there here. So the rental assistance program, as you can imagine, has been quite the lift, right? It's been very challenging from the beginning because we have this extreme amount of need that came all at once. So I had mentioned, I put in the chat, we've deployed now $47 million, and that's 12,000 households that we've served, an unduplicated number. And a couple of things that were really important for that. One was intergovernmental participation and cooperation. So the county and the city, from right off the bat, said, let's work together so we can create a scaled response that is consistent. A number of the entering suburbs also participated with their first round of the CARES Act. And so, that was important from the start because we knew that we'd be able to scale the effort and have that support consistently. The second thing is really trying to think about community partnerships and how we're getting the word out. Bill had mentioned, the importance of that earlier. It really was truly important. We connected in with a number of organizations. I see some on here where we opened up our Salesforce platform, which is our customer relationship management system that allows for people to make referrals through that system, really creating a network and understanding from the very beginning where people were coming from, why they were coming into the system, who they were, and then using that data to analyze, how we should continuously improve the program. Because oftentimes people will develop a program and implement it, but then you have this kind of constant continuous improvement. I'd say finally too, and though we are working with federal money and there's limitations on that, we've tried to create the lowest kind of barriers possible. That can always be improved. Some of that relates to constant, kind of constant changing in the federal landscape and what's required. Over time, it's funny, the program started fairly loose and then ratcheted up to make it tighter to use at the federal level, and now incrementally over time it's loosened up again. So just really trying to be thoughtful about that deployment and start with yes. And as you're thinking about kind of how you're deploying the dollars as opposed to starting with no and prove it to me. Though of course, because we have compliance requirements, you have to have that the proof of hardship and and income qualification. But it's really starting with that yes, and then over time, if the paperwork or the responsiveness doesn't work out, then then that's where you get to the no. So I call that some of the key factors there, Sally.
Thank you. Maybe you would take us through what you know about the tax credit, because Judge Scott just asked the question in the chat about that. Her concern is that the tax credit might be available to unscrupulous investors and flippers, and how will that roll out? Do you have some insight in that?
Yeah, so that's good. Those are good questions. So Neighborhood Homes Investment Act has been floating around for over a decade. As kind of on the wish list of organizations like CHN and other nonprofits who do acquisition, rehab, and new construction of single-family homes, within areas that sometimes are challenging from a market perspective, like in Cleveland and many of our inner ring burbs. It is a tax credit that would otherwise, so some of you are familiar with the low-income housing tax credit, and in some ways it would be administered similarly to that, some ways a little bit differently. But the state of Ohio, through the Ohio Housing Finance Agency, would be allocated a certain amount, if this passes, would be allocated a certain amount of tax credits. The state of Ohio would have a competitive process to ensure that you have high quality developers who are then utilizing the tax credits and having a plan for it. And then from there, developers like CHN, do acquisition rehab, where we are able, and in most cases, in a lot of cases here in Northeast Ohio, there is an appraisal gap between the amount of rehab that you need to be able to undertake and what the project can otherwise support from a purchase mortgage perspective because of property value considerations and constraints. So this helps to fill that gap with the tax credit. We would sell it to a home buyer that would qualify kind of under the criteria. So it really isn't. There are a lot of controls, for it not to be utilized by flippers, because what a group like the Ohio Housing Finance Agency is going to want to make sure of is that they're working with the organizations like ours and other nonprofits, like Famicos, for example, who I know does quite a bit of acquisition rehab in their footprint, to deploy these dollars.
Thank you. So the big announcement last April that CHN Housing Capital was launching the Believe mortgage product sent ripples through the community development world, because this has been a highly desired product that just our market wasn't having this need met. And according to Frank's research, very few of these mortgages are written by banks. This innovative partnership, and I'd like DJ to chime in here as well, because Huntington, for whatever reason, seems to be the bank that's on the forefront of all of this innovation. So I'd like to hear how this came about, how Huntington came to the table, and why Huntington chooses to do this type of thing when other peer banks aren't doing it. It's really commendable.
Sure. So thank you, and thanks for everyone. Chip, thank you for the invite. So I've been fortunate to know Kevin for a few years, and needless to say this, and I think he'd admit, was a big, huge labor of love. It was a long time in the making. We probably started in 2019 in conversations really about, there's different factors that we see in communities, especially in the demographics that we're looking to obtain these small dollar mortgage amounts in. And a lot of that is education pertaining to knowing how to buy a home or what's it mean to buy a home, access to down payment resources, but then also, just the trust of financial institutions. And, CHN checks all those boxes. So Kevin was and I was having conversations, and he had brought up his vision on this program that sort of evolved from his vision, and how do we utilize it sort of on a correspondent type of relationship. And, as Chip and Frank and others know, banks, we make these CBA agreements, but sometimes it's just business as usual. And I'm not your traditional banker, I'll say that up front. And the push that we made is we have to change if we want to make a change. And taking the concept like this Believe mortgage, and Kevin would know better than I believe it's the first of its kind, maybe nationwide, to where, again, the relationship with CHN, and how do we reach that community that needs, that extra assistance, or, those smaller dollar amounts, and be able to get those home ownership opportunities into their hands. So again, just to put in perspective, Kevin and I started these discussions in 2019, and then we rolled it out, just in April of this year. So it was a long time coming and really getting everybody on board. But a lot of it is again, the infrastructure and capabilities that CHN, through Kevin's leadership, has been able to design that really got us comfortable internally to really be able to roll this out. So Kevin, I don't want to steal his thunder around, what Believe mortgage is. So I'll let him explain, the details on that.
Sure. Well, yeah, thanks, DJ. I really appreciate the props. But yeah, I mean, this definitely would not have happened without your kind of leadership and vision, and what you brought to the table with Huntington. So we super appreciate you there. So we look at the Believe Mortgage, CHN as an organization, as you know, most of you know us as, the lease purchase people, right? And in 2010, we needed to fill a void, right? Because there was a lack of mortgage lending. And we began filling that void on our balance sheet with small dollar lending to our lease purchase residents, throughout the city of Cleveland. And what we found was that for our lease purchase residents and so many other people who are coming into our financial capabilities and home buyer ed classes, there was still, even over time as the economy recovered and so many of us were able to access credit, there just was a lack of availability of credit for most of the people that CHN serves, right? And when we were looking at Northeast Ohio, we were looking at Cleveland, Cuyahoga County, we were finding that in particular in majority minority neighborhoods within Cleveland and within the inner ring burbs, we were seeing a lack of mortgage lending. So, in 2016, when I first joined CHN is when we started our journey on what that would look like, and began to work with a number of different stakeholders and partners, a lot of you on here, to really try to figure out what is the best way for us to fill this need. And that eventually became the Believe Mortgage product. And so the Believe Mortgage product is a first mortgage that, can, potentially be paired with a second, but really it's a first mortgage product that is intended to help fill the gaps. It's intended to allow for more flexibility in credit scores down to 570. It's intended to allow more flexibility in down payment requirements. There's a 3% down payment requirement. So what you see in these loan terms are more flexibility that are addressing some of the barriers that we otherwise see in our community. So many in our community have a lack of savings. Particularly when you look in the African American community, there's 10 times less savings than in white communities. When you look at credit scores within our communities, we have not seen them recover. For many people, whether they're low income or not. And so we want to start pulling down those barriers. And so in doing that, you really need to think through, okay, how are you going to structure this? What do you need to do it? We made some investments infrastructure wise, team wise. I think our EVP of lending ops, Greg Perelka, is on here somewhere. Bringing someone over that has 30 years of mortgage banking experience in banks and non-bank lenders, because we were intent on making a serious investment in something that was sustainable and scalable. And you heard some of what Sally had said earlier about the amount of activity and interest we've had. I mean, now we are having, every day we're getting a couple of individual inquiries about this, product. And it's working. Right. We're seeing predominantly African-American borrowers. We're seeing predominantly loans that are under $70,000 mortgages. We are seeing people geographically across Northeast Ohio, but mostly located in those geographies where we were seeing a lack of mortgage lending. We've seen some of what you've heard before, which is it's cheaper to be a homeowner in Northeast Ohio most oftentimes than it is to be a renter. That Believe Mortgage, for example, has allowed for 2 of our borrowers to buy the homes from people who otherwise, or to buy the homes for people who were renting, right? I mean, they were renters whose landlords were looking to sell the homes. They approached their tenants as to whether their tenants could buy. The tenants came to us, and then their tenants were able to secure a mortgage with that more flexible underwriting. Both of those tenants are paying less than half of what they were, or about half of what they were as rent in principal, interest, taxes, and insurance. So you're seeing real kind of wealth building and stabilizing effect there. And now we're even having some landlords. Some of them saw the Cranes article on Believe Mortgage. And landlords are reaching out to us and saying, hey, I'm thinking about selling my unit. Is this something that might work for my tenant? So we're, it's exciting to see the progress that we're making.
How are potential borrowers hearing about your program? How is it marketed?
Sure. So we're using all the same methods that folks otherwise would, plus some, right? And focusing them oftentimes in a different way, right? So when you think about mortgage lending, and DJ would be able to give you the real 401 course on this. I'll do the 101, right? You start thinking about folks like realtors, right? Who is the person that is most likely to touch a transaction, right? Repeatedly within markets. It's a realtor, right? So we began marketing very closely to realtors in all neighborhoods, and with particular focus on those where we saw the least amount of mortgage lending. And, that has allowed for us to, see more activity from there. We've worked with, different, nonprofit groups. We've worked with some cities. We're beginning to enter into different partnerships with people who may be doing home building or rehab, as having our Believe Mortgage really be that kind of featured product for their customers. So we're trying to use a lot of the traditional models that otherwise are used for marketing, but then focusing them with the people in our community who are least likely to get that message through a traditional mortgage financing effort. DJ?
Sally, if I could add real quick on that, I really want to make it clear that, at Huntington's perspective, we love this partnership, but I wouldn't allow that to let us off the hook and still not focus in that market ourselves, and, we have zero minimums on our loan, but I think this is like in addition to, and like I said, Kevin's team that he's built, but just the organization, it's a great partnership, but also I think it's important, for banks to know that partnerships like this, truly allows us to give a no with hope. So if someone can't come through Huntington, for example, we know that they may be able to qualify for the Believe Mortgage. And even if they don't qualify for that, we can get them to Kevin's team to be able to start working on that process to build them to where they need to be. So, all the interaction that happens, outside of just signing that mortgage note, there's a ton of different, arms and legs to this thing that really works for the community.
While I have you, DJ, I just wanted to say that Huntington is doing an incredible job of reaching consumers in our region for home repair lending. So what is the strategy there? Because you seem to be doing more than other lenders who have been here, working at this a long time. What's the secret?
Yeah, I think it's being intentional. So someone had mentioned Keisha's group there in Cleveland Heights. We have a very good relationship with them, working with Kevin. How do we, some of the things and conversations I've had is how do we, there's a lot of grant money out there, but how do we stretch that grant money? And someone mentioned the 2.99%, rate that we have. So it's different products. And what we're finding out is there's a lot of instances with the home repair lending, right, wrong, or indifferent. There's been a lot of appraisal bias, especially in our communities of color, to where the values may not be there. So there's equity issues, but that doesn't mean that the homes don't need additional improvements. And that's why we've come up with unsecured piece as well, but also just our home equities that we've done. But again, we've made an intentional focus to really be a part of how do we really lift and revitalize the communities that we serve. If you looked at Frank's, report that he had with the deposits, for example, Key probably 4 times what we have, but we have more banking offices within the city of Cleveland than Key does. And that's intentional. And this is not a slight on Key. I'm just using this example as that, we really want to be a part of our communities and really having these conversations. And, we can do infill, we could do new construction, but really what does that mean for those folks who've lived in those communities all these years and need to do improvements on their homes? And that's sort of the approach that we've taken.
And do you believe the additional branches that you have is extremely helpful for you as a bank?
It's helpful, and I'll say that with an asterisk. I think we still have work to do. I think there's still opportunities for us to keep expanding, but I do feel that that local presence, means the world, around relationship. And really, when we say we want to be a part of the community, we really have to be visible, and I think that's very important.
I would agree with you. There are some questions in the chat that I'd like to pose. From Phil Starr, ERA2 allows for paying rent forward for 3 months in addition to delinquent rent, which can help stabilize housing for families and possibly get more landlords to want to participate in the program. And he has heard that the county wants to limit it to only 1 month forward rent. I suppose, Kevin, the question is that true? And if it is, how will this impact your program?
Sure. So, I think, the county, as they're thinking through how to utilize dollars going forward, they're recognizing that there is a limited pot, and their position has been to limit that prospective rent to 1 month. I think the biggest thing that it does is that it makes people reapply sooner, than they otherwise would have to. So we'll see more repeat, potentially more repeat applicants in a quicker period of time. We need to make sure that we have the staffing and structure available to support that and plan for it. That's the biggest thing. So, I mean, one of the things I didn't mention earlier is that, we have 60 people working on this. Right. I mean, that's been, most other organizations across the country don't have that level of people working on this sort of program. With the scale of dollars that we were provided, it allowed for us to really staff up. I mean, we're CHN, has 225 employees, not including those 60, but, we essentially hired a whole new nonprofit just to focus on that effort. And we need to be constantly evaluating the amount of workflow that we have. We have on average 100 applications still a day. So.
Okay, well, we have another question in the chat, and applauding this program for being innovative and asking if this model has been replicated elsewhere and what are the impediments to scaling this in other cities such as Buffalo, New York. And I know, Kevin, you're very familiar with the Detroit home mortgage product. How does this program with Huntington differ, and how do you feel things are going elsewhere in other places?
Sure. In terms of replicated elsewhere, I wouldn't say that this model has been yet. A couple of things about this model that are different is, most of the time when you see products like this, they're considered a specialty loan product, right? And there's a lot of limitations around who can and can't be the borrower. One of the things that we in Huntington have really worked through is making sure that this loan product is as flexible as possible. And what do I mean by that? Not just in terms of not like a how low can you go type of concept, though we have more flexible underwriting than most anyone does with this sort of loan product. But flexibility in who your borrower is and where they are, right? Our borrowers can be from anywhere in Cuyahoga County or Lorain County. They could be a 750 credit score or a 570 credit score. One of the things that we've really focused on, and I think you hear a constant theme from CHN, and even talk about the rental assistance, is it's about scaling and sustainability. And in order for us to have a sustainable model, because it is incredibly difficult and resource intensive to originate mortgages that are under $70,000, we need to be thinking about how we're a full service alternative mortgage lender and not just doing kind of niche products for a limited group. So, as we've been thinking about that, it's about, us doing the Believe mortgage, us having refi availability, us having repair loans and grants, to put down payment assistance. We were recently awarded, I just saw Jason Powers pop on, we were recently awarded the $1 million loan loss reserve to help bring more acquisition rehab lending into the middle neighborhoods of Cleveland. So once you start adding those different loan products on, it allows for you to grow and scale and kind of do more of that deep mission lending. In terms of replicated to other markets, this is something that could be replicated in other markets. We've been asked to bring this up to Detroit, where we have an active and growing office. It is something that could be replicated in Buffalo. I mean, I think there are, when you look at cities similarly situated to Cleveland, there's a number of places that I would point to, like Buffalo, Detroit, South Bend, Indiana, Toledo. I mean, there's a lot of Youngstown. There's a lot of cities that could use this sort of loan product.
We had a question from Rob asking, is it correct to assume that you will be reporting your demographic data of loans and applications of banks required to do? Do you have any requirement for HMDA? You probably don't, but what is your plan to report that out to the community?
Yep, we'll be reporting. With being a licensed mortgage lender through NMLS, we have requirements that we'll be doing. We have kind of widely available products, so we're going to begin doing that this year. So we might end up in Frank's report next year. I'm like super excited. It's like we know that CHN's hit the big time if we get into those top 15 lenders.
We hope that happens. And with the funds that Bill Faith told us are coming down from the state and the federal government, what's on your wish list? And I would bring DJ back into this too. What do you wish you could do? What do you look at in the coming year as a goal? What do you feel is a missed opportunity in the community that needs to be filled?
So I guess my biggest wish list, especially for our communities that have been undervalued or under-resourced, is the ability to have appraisal gap capital. So that market value gap is going to be huge. And I think a lot of these funds, to Kevin's point, especially around the Neighborhood Homes Investment Act, that is definitely going to be a game changer. Sally, I think we talked about, and for others, that we've got, to Kevin's point around acquisition rehab. So what we're seeing, it used to be that first-time home buyers were competing against first-time home buyers, and now they're competing against equity funds. And you just can't win that race. It's no matter what you bid, you can't win that race. So how do we, take a look at the inventory that is there, that may just need a little bit of work to be brought up to code and get that into the right hands. And, through our community access mortgage that we have, we call it the CAM, we're now going to be able to go up to $100,000 in rehab cost, sort of for that acquisition rehab space. But the missing piece to your question, in some instances, is there's still going to be a gap, because everybody knows the cost of construction now. Shortage in the labor force has hiked up prices as well. So, to be able to get that home and get that acquisition rehab in place, a little bit of gap subsidy is going to be needed. And I think, a lot of these funds can be game changers for us.
I agree with DJ. I mean, it's, for one thing I want to start with, though, that has been kind of I'll say a frustration and interesting to me, is that, all the problems that we have now, we had at some level in the before times, right? They were compounded in some ways now, and they will be lasting in the after times, right? And so when we're thinking about building and delivering a system, let's not do it in ARPA world, right? Let's do it in what we otherwise need world, right? And what we otherwise need is local resource, right? I think that Columbus and what they've done with their trust fund is a great example for the city and for the county to consider. It is locally resourced, and for me, it is our responsibility locally to make sure we have that full resourcing, and we should be considering the federal money, even if part of a critical tranche, of that. It should be only part of and not the main focus of what we're doing. Taking the next step over, I didn't mean to trash ARPA, but what I was saying is we need to be thinking about beyond ARPA, right? ARPA provides us the opportunity to build these systems at scale and begin to continue to transition our expectations for ourselves locally, right? When we think about rental assistance, in the before times, it would be rare that anyone beyond the person who was in crisis would reach out for eviction prevention, right? Now we constantly have landlords reaching out for eviction prevention, right? That is stabilizing, right? That's a change in culture. We look at the lead work we've been doing in Cleveland with the Lead Safe Home Fund. We're running a loans and grants fund. Again, we have landlords becoming more engaged in the health and housing stability of their tenants, right? So when we're developing this ARPA strategy, we need to be thinking about how we're continuing to shape the ecosystem. So we know that we need more small dollar mortgages, right? So how do we help to supplement what we're doing today? There's a number of different ways. Home repair. We know that we need additional home repair in our community, right? How do we do that? We can't just do it all as grants, but we can do a portion as grants and then a portion as dollars that otherwise could recycle and help to create the base of a fund for us, right? To help to incentivize additional additional investment by the by the business community, particularly financial institutions. Thinking about acquisition rehab, right? Acquisition rehab, this could help to fill some of those gaps. Hopefully we will have the neighborhood homes investment tax credit. With or without it, we need to be thinking about how we're filling those gaps because we still haven't solved for values for a number of reasons in our community, right? So we need to be thinking about this and showing that in this time we can continue to build and scale the systems we have, and then once we get through this 3-year slug of a significant amount of dollars, we should be supplementing that. We should be really filling that with local dollars going forward.
Thank you. I appreciate both of you